Good morning, ladies and gentlemen, and welcome to the Rainbow Rare Earths Limited investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to CEO George Bennett. Good morning, sir.
Good morning, and welcome to 2023, and let's hope it's going to be a fantastic year. I think it is going to be a good year for all of us compared to last year, and Rainbow certainly looks forward with what we've got on the cards for 2023. Just the disclaimer, and I'm going to go straight into our presentation about Rainbow and why I think it's a unique investment opportunity. As the audience may or may not be aware, in the last quarter of last year, in October last year, we released our PEA on the Phalaborwa flagship project that we have in Rainbow, and these numbers are unsurpassed for a project of this nature and size. We got a post-tax NPV of $620 million, IRR of over 40%. EBITDA margin at spot pricing, I must stress spot pricing, lots of rare earth studies coming out over the last year have been using forecast pricing to justify their returns. We at spot prices, we have an EBITDA for life of project of $195 million per annum, a margin of 75+%, and based on our capex, which is below $300 million for this project, it's a payback of 2 years. As I said, this is a very strategic asset. It's near-term production compared to a hard rock rare earth project. We believe it's been de-risked by the release of the PEA, and I must stress it was a very high-level PEA. In other words, it was closer to a feasibility study than a PEA, and those financial numbers confirm that. We're using a unique intellectual property developed with our partners K-Tech in the US, in Florida, which has been applied to other phosphogypsum projects around the world. These guys have got over 20-odd years of phosphogypsum IP, and we also believe we've got a pathway to growing demand for these magnet rare earths as they're termed, being neodymium, praseodymium, terbium, and dysprosium, with a pipeline of other projects which I'll allude to later. And very importantly, we've got a very experienced team with a proven history of delivery. If we have a look at the investment opportunity for our viewers, and as I said, the Rainbow market cap at the moment is around about $65-70 million, yet we've got a NPV at $627 million, post-tax NPV at spot pricing. And you've got to ask yourselves whether you think Rainbow will be able to close that gap. If we close that gap by 50%, it's a 5-bagger, and if we close that gap all the way, it's a 10-bagger in fund managers' terminology. Well, I believe we do have a team that can deliver that. If we look at myself, successfully sold a partner in the business. We sold to HSBC as my early stage of my career as an investment banker, then successfully listed Shanta Gold in London. Then I started MDM Engineering out of a bankrupt engineering business with my technical director, Dave Dodd, the original D in MDM. And we listed MDM in 2008 very successfully, paid a dividend every 6 months we were listed, even during the 2008 financial crisis and subsequent years. And basically over that period, Dave and myself combined have done over 100 feasibility studies. And in MDM Engineering alone, we built 22 mine projects around the world, process plants, and Dave collectively has done over 80 around the world, successfully designed and built. And I must stress that 2 of those mines we did at MDM Engineering, or process plants we did, were gold and uranium mines. We were dealing with continuous ion exchange and materials of construction similar to what we see in this rare earth project and some of the technology that we're using in this rare earth project. So I think we've got a very experienced team. We also have Chris LaRue, ex-chief metallurgist at Goldfields, who also worked for me at Rainbow. He's been involved in 2 rare earth studies we did at MDM Engineering. the Loftar rare earth studies and the Peak Resources rare earth studies. So we have Chris's experience in uranium and rare earths with us, and Rue joined us in the last quarter from Senate Engineering, and Senate were responsible for the bankable feasibility study for the Makango rare earth project in Malawi, and Rue was the lead process engineer on that study. So we've got a very experienced team with lots of rare earth experience and relevant experience through uranium, as I've mentioned. And then our chairman, Adonis Proulis, has successfully listed and developed a number of mining projects on the London and Toronto markets, got a long track record and strategic vision for growth. And then Pete Gardner, very importantly, our CFO, has been involved in a number of development projects, financing them, taking them through to production from a financial aspect, as well as being involved in the sale of Amara some years ago, a well-known gold mining company. So, as I said, I think we've got the right team, and lots of junior miners out there will battle to find the track record I believe that we've got here. Now, talking about the market now, we all know that rare earths are critical in what we call permanent magnets. There are 17 elements, but only 4 of those elements are really critical. The 2 main ones are neodymium and praseodymium, and to a lesser extent, dysprosium and terbium. They are regarded as the permanent magnet rare earths, and in Paderborn, we've got all 4 of these rare earth elements. They account for 95% of global RE consumption in terms of value. And permanent magnets are the most important, rare earth permanent magnets are the most important components in wind turbines to enable them to have a very high output from their motors. And in the electric cars, permanent magnets give the batteries further range, because your motor is able to have greater output for less draw on your battery. So the less draw on your battery, the more range you've got for the same power output enabled by permanent magnets. And every electric vehicle has between 3 to 5 kilograms of rare earth magnets in their vehicles. And every 3 megawatt wind turbine has 2 tons of permanent magnets, and 60% of those permanent magnets are neodymium praseodymium. So very, very important. And if we're going to achieve, as we know, what the world's looking to achieve, net zero in 2050 in terms of carbon emission, and that's only going to be driven by wind turbines, electric vehicle penetration, and to a certain extent, or to a large extent, solar as well. And there are some components of rare earth elements that are used in solar panels as well. So we see very, very strong demand, and this has been legislated globally, or certainly by the major Western economies in the world. And we also see government policy being driven by COP27, and this is going to continue to create demand for these rare earth magnets. Basically, as you can see from this chart here, forecast for the rare earth supply deficit, which is there's not one forecaster or analyst in the world right now who doesn't see a supply deficit of these rare earth magnets. And you can see the rainbow basket there in the red line, which is we had a peak in 2022, which is last year, because there was extra wind turbine demand out of China, which required a massive amount of permanent magnets of neodymium and praseodymium being installed in these wind turbines. And that's what you saw the price jump in 2022. Came back as those wind turbines demand sort of tapered off. And now we see continued forecast growth for these elements, and you see the price of our basket continuing to grow. If you have a look when in 2026, when we expect it to come into production, our basket is still rising, and it rises all the way through to 2030, which is where we see the price of our basket increasing quite significantly. But even at spot prices, we have a very, very robust project. Unfortunately, China controls this market. Some of you may or may not know that in 1992, Deng Xiaoping of China made an announcement that the Middle East has oil and China has rare earths. Already 30 years ago, the Chinese realized the strategic nature of rare earths, and they decided to try and dominate this market, which they successfully have done over the last 30 years. So we've got 60% of primary production being dominated by the Chinese, and 90% of the downstream processing being dominated by the Chinese. And with the geopolitical forces at play, Russia we don't need to talk about, and even with the stress around China, the whole Western world realizes that these critical rare earths, we can't rely on Chinese supply chain, and they've been looking for independent supply chain outside of China. And there are very, very few projects that are going to be able to deliver independent supply chain outside of China. And we believe Rainbow is one of those projects, especially the Phalaborwa project. There are long lead times for hard rock mining projects to come into production. If you Google historically from discovery of a asset to production, you're looking at anywhere between 12, 15 to 25 years for projects, and that's your typical timeline. Now, we only secured the Phalaborwa project in November 2020. I started Rainbow working on it in January 21. And so effectively, we've delivered a lot over the last 2 years, from January 21 to where we were at the end of last year, and we're forecasting to be in production in 2026. So that's a very, very short timeline. It's the nature of the project because we're not mining hard rock for our rare earths, we're processing existing gypsum tailings, and this is why our timeline is far shorter than other rare earth projects. And you can see from our numbers that we have the ability to sustain lower rare earth pricing, and a lot of hard rock projects, to be honest with you, we don't believe have that ability to sustain lower pricing. As I said, most of them are using much higher forecast pricing in their feasibility studies to be able to justify their so-called returns on their projects. This is where Rainbow sits in this rare earth supply chain and rare earth magnet supply chain. So upstream, you've got mining, which entails drilling and crushing, hard rock mining with drilling and blasting. Then you'll have to transport that to your process plant, where you've got crushing, you've got milling, you've got flotation. Then you produce a rare earth concentrate. That rare earth concentrate then has to be floated, and then it has to be cracked into a chemical form. And once it's cracked in the chemical form, can it go into separation? And these are often done in different plants. If you look at a couple of projects in Africa, they're talking about producing a mineral concentrate in their jurisdictions and then shipping that mineral concentrate to the UK, where it has to be cracked in another plant, and then it has to go to a further plant to go into separated rare earth oxides before you can supply magnet manufacturers. This midstream area is done mainly because before the magnet manufacturer, it has to go to metal and alloy plant, which then will turn the separated oxides into metal, then an alloy, and that alloy then has to be fed into magnet manufacturers before it goes further downstream to the OEMs. That's to go into the motor vehicles or the wind turbines or the drone manufacturers of the world. China dominates this all the way through to the midstream. And as I say, Rainbow on a unique position because we're dealing with a cracked chemical concentrate. We don't have to do so many processes beforehand. We are just going straight into producing a solution, which we're then going to separate all the way into separated rare earth oxides. One of the few projects in the world right now doing this. Lynas in Australia, one of the few hard rock operations that are operating in the world right now that go through all the way to separated rare earth oxides. We are doing that without all the prerequisite processes. So that's why the Rainbow capex for a project of this size is far lower than a project you'll see to produce the same amount of separated rare earth oxides that we're going to be separating. And this gives us very, very strong fundamentals from a financial point of view that you've seen in our study. Here we'll go to look at the actual project in Phalaborwa. Now, Phalaborwa is a mining town in the far north of South Africa. You can see the photographs there. These are the two gypsum stacks that we are going to be processing for the rare earths. Next door, in the top right-hand corner, you'll see the mothballed phosphoric acid plant that Sasol ran. Now, the reason why this is unique is that you've got a phosphate mine next door run by Phoscor, the government mining company. They produce phosphate rock, which is then concentrated into a slurry. That slurry was then fed next door to a phosphoric acid plant where they added sulfuric acid and heat to enable them to produce phosphoric acid for the fertilizer industry. As a byproduct of that, so the rare earths that were in the host rock that were mined by Phoscor were concentrated, as I said, in the phosphate slurry, and then in the process of producing phosphoric acid, you produce a gypsum residue, and the rare earths were slightly upgraded further in the gypsum residue. And this gypsum residue then created these two stacks that you see there, which are 30-odd million tons in size, which gives us a project life of just over 14-odd years for this project. What's important, as I said, is that when the phosphoric acid was created or produced, you use sulfuric acid and heat. Now, if you go to a hard rock project, and if you look at any hard rock process to crack your rare earth elements before you can go further downstream, produce a mixed rare earth carbonate or a mixed rare earth oxides, which you then have to go into separate and to produce separated rare earth oxides, you need to add sulfuric acid and heat. And these two elements have been done in the project at zero cost to the project, which is why we now have a OPEX that you can see there at $33.86 US dollars per kilogram, which is, we believe, probably the lowest OPEX for separated rare earth oxides in the world. You can look at the Linus website, you'll see what their price is. It's a lot higher than this. And compared to our basket price per kilogram, our revenue per kilogram of our basket price, you can see then why our EBITDA margin is so high. Another important point is that because this is in an existing mining town with 3 operating mines, we've got skilled labor available. All the infrastructure associated with the phosphoric acid plant that's mothballed, in other words, workshops, 2 train sidings, high voltage switch yards, machine shops, laboratories, admin offices are still available to Rainbow to this project, which has kept our capital price for the project low. As I said, it's sub $300 million. And we believe that our bankable feasibility study that we are conducting this year in Rainbow, that we will possibly be able to optimize that capex number even lower, which makes us it will further enhance the project economics of this project. So to look at where we are and what we're looking at in 2023. So in the last quarter of 23, the highlights were the publication of our feasibility, our PEA feasibility study, which delivered very strong numbers, as I've mentioned. And we also strengthened our technical team with the acquisition of Roo from Senate. He's got very relevant uranium and rare earth experience. And now looking at 2023, what we're doing is that in the first quarter of 2023, we will be coming up with a resource update, and we will also have commenced the bankable feasibility study, the work streams for our bankable feasibility study, and some of those have already started, and I might get to talking about them a bit later. And then we're going to be basically building our pilot plant, which will be a continuous pilot plant to create design data for our final commercial plant. And like any project of this nature, it's important, we believe, to have a pilot plant. We know we're very comfortable with our process has been proven at lab and sort of bench and lab scale, but we want to put it through a continuous pilot plant just to get design information, and then there'll be a permitting update, and we will be hopefully completing our bankable feasibility study at the end of 2023 or the latest the first quarter of 2024. And then as I said, we're expecting production in 2026. In terms of Rainbow's business model, we are, as I said, we do have just to talk about our project in Burundi, which the market does know. We have a hard rock mining project in Burundi. It's a very high grade project. I'm not talking about it because it's on care and maintenance because we've been suspended by the Burundi government. We are in negotiations with the Burundi government to get this project exporting concentrate stockpile there, as well as get our trial mining operation going again. But as I said, the timeline with the Burundi government, I don't want to give the market a timeline because we've been in negotiations with them for a number of months now. And as soon as we have clarity on resolution, we will inform the market. we do believe we will have resolution because the government has come to us and said we want to now resolve this, and we had discussions with them in November last year, but now we'll have to see how we can conclude those in 2023. But failing, as I said, failing to talk further about Burundi, because as I said, it's a much smaller project in the life of Rainbow. Burundi's got a long way to go to commercial production, and Phalaborwa, a project that at spot prices will produce sort of circa $200 million of EBITDA, and that's where our focus is. And there's also, we also want to leverage the IP we've developed for other opportunities similar to Phalaborwa, and that's why I say we've got other near-term opportunities in different jurisdictions. So we're de-risking Phalaborwa from further projects in different countries, but importantly, it's using our IP that we've generated in the phosphogypsum to pursue these other opportunities. The one was the major chemical processor in South Africa that has got a live phosphoric acid stream with rare earth elements in it, because it's using the same feed rock that comes off, or slurry that's produced by Phoscor and Phalaborwa. They use for their phosphoric acid production. We're busy with conducting testing with KTEC and Florida as we speak. And then we signed a master agreement with Morocco, the world's leading producer of phosphate projects, and UMP6, the university in Morocco, to co-develop a flow sheet to extract the rare earths that we know are present in their phosphogypsum. It's not in their sedimentary phosphogypsum that we're targeting, but it's in their live upgraded phosphogypsum stream that we believe is the opportunity in Morocco. And as I said, Morocco is a very exciting opportunity for Rainbow. It creates project diversification, country diversification, and we've signed 2 NDAs with 2 other Phalaborwa lookalikes in another continent. I don't want to talk about which continent because we have signed these NDAs. We can't talk much more than that, but we signed NDAs initially with OCP and with the chemical producer in South Africa, and that led to stronger agreements, which we now pursuing. And likewise, we signed 2 NDAs. It's a very strong step into hopefully concluding 2 agreements to do JVs with these 2 Phalaborwa type opportunities in another continent in the world. So we believe we've got a pipeline for growth. These other opportunities are much longer lead times. They're sort of 25 plus year life of projects. So Rainbow don't just have Phalaborwa as an exciting phosphogypsum opportunity, which has got a 14-year life. We have got a number of other opportunities that have got a very, very long life. So this is going to enable Rainbow, I believe, to become a significant producer of rare earth oxides in the world. Just to talk about the Phalaborwa production, if you look at the PEA, we're going to produce, amongst the 4 separated rare earth oxides, about 2,000 tons per annum, which is currently a third of the size of Lynas in Australia. And Lynas, producing circa 6,000 odd tons of these permanent magnet rare earths, they've got a market cap, I think, of about 4 to 6 billion Aussie dollars. So, we're going to be a third of the size. And so I don't need to explain to you what that means for our market cap down the line if we get this right. So as I say, I think Rainbow is uniquely positioned for growth in a growing market. We've got the right strategy, we've got the right technology, we believe, and the right skills, very importantly, because it's all very well having a great project. You haven't got the right skills to bring online. We know how many disasters are out there in terms of projects not coming on, not being brought to bear. We've got an exceptional flagship asset, as you can see from the PA numbers, and I say we've got a pipeline for growth, and we've got strong institutional support, I believe, in Rainbow. So it makes us very excited about the year ahead. I believe it's going to be a very important year in Rainbow's life. We're going to be able to close that value gap between our market cap and the NPV of our Phalaborwa project, and potentially some of the other projects that we'll be able to get further definition on as the year progresses. So just to conclude, if we look at the Palabora forecast in terms of when we're in production, what those forecast numbers are for rare earth pricing. At forecast pricing, we've got an NPV post-tax of over $1 billion, an IRR of over 44%. We'll be generating $320 million of EBITDA at 2026 rare earth prices when we forecast to be in production, and we'll have a margin of over 83%, which will be phenomenal for any project of this nature. So I conclude that I think this is a great project. We're very, very confident that we'll be able to deliver this to the market. As I say, we've got a track record of delivery, and I don't believe we're going to let the market down, the team and myself. And as I said, the team is very important. I'm just the smokes. It's the clever guys behind me that will make sure we can deliver this. But I've got the right team, and that will be a good result for Rainbow. Thank you. I'll now hand over.
George, that's great, and thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while George takes a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. George, we did receive a number of pre-submitted questions ahead of today's event, and as you can see there in the Q&A tab, we've also received a number of questions throughout your presentation itself this morning. So firstly, thank you to all of those on the call for taking the time to submit their questions. And Tara, perhaps I could hand over to you to chair the Q&A session with George and respond to those questions where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Good morning. We've received, as Jake has mentioned, a number of questions on across various sectors. But to start with, questions on Palabora. George, how will the energy crisis in South Africa affect production, do you think?
Well, Palabora is quite lucky in the sense that compared to a normal mining project where your energy as part of your OPEX is roughly 50%, and we are a low energy consumer at Palabora compared to typical rare earth mining project. And I stress it's not a mining project per se. This is a chemical processing project, and it's a chemical processing plant we will be building. And as a result, we don't have, we will just be viewed as when all our license applications will be as a chemical producing company. But so we consume, our power consumption is about 21% compared to a normal project, as I say, so it's low in comparison. And importantly, we believe by 2026, the energy crisis will be resolved to a certain extent. I don't say it'll be completely resolved, but we do have a power allocation at Palabora because it's an existing brownfield site with an existing high voltage switchyard, which is still operating today. And basically, we also will be using solar power. And Palabora is one of the hottest places in Southern Africa in terms of solar irradiation values. Is very, very high, and we will be looking at supplementing the grid power with solar and with battery power as well. So we are not too phased about it, to be honest.
And can you give an indication as to when the pilot plant will be operational, and indeed how long it will be operational for?
The pilot plant is forecast to be operational in the second quarter of this year, and it will be roughly a 3-month continuous pilot operation. 3 to 4 months, but it won't be longer than that.
And will there be a fundraise prior to the pilot plant being built?
There will be. I've been very honest with the market when I did my last fundraise 18 odd months ago that the money I raised in would not be to fund the pilot plant. Even then, I said we will need a pilot plant once we've got this flow sheet finalized. We finalized the flow sheet and produced our PEA, and in my presentations in October, November last year, I reiterated to the market that we would be needing to come to the market to finance the pilot plant.
And when do you think the feasibility study will commence?
Well, we've actually commenced the feasibility study already. We've got funds, as I also mentioned, that for the feasibility study commencement, we started the certain EIA studies because the EIA permitting is on a critical path, and we've already started that as we speak this month. And so that has commenced.
Thank you. Are you considering an offtake agreement from Phalaborwa?
Because these rare earths are very critical to Western governments, we are going to be looking at a combination of debt and equity to finance the project. We've already had indications that we would be able to bear 70, maybe even 75% debt on this project because the financial numbers are so strong. And we are looking at a number of ways of project finance for that. We've got strong interest out of the DFC in the US, which is a government financing institution in the US for project finance, as well as other debt financiers in South Africa as well as internationally. So, and then there's also looking at the option we're talking to OEMs or looking at some kind of strategic stockpile of rare earths, and they could be part of the financing mix. So we are looking at all avenues. But there's lots of interest, as you can imagine, because there are very few rare earth projects coming into production in the timeline that we are going to be coming into production at the type of pricing that we will be able to come in at in terms of production costs.
And that segues into, when do you anticipate production to commence?
As I mentioned earlier in our presentation, if all my hurdles or timelines are met, which is the pilot plant, the bankable feasibility study, I would be looking at 2026.
Thank you. There's obviously significant risk and cost associated with development projects. And how can you provide comfort on Rainbow's ability to succeed?
Well, I think you then have to look at your team, and the team that I've got at Rainbow, we're all at MDM Engineering together. Over my 10 years in MDM Engineering, I built 22 mines and process plants. Not one of them was over budget. I did a number of fixed price contracts, which is known as EPC contracts in the mining world, where you give the client a fixed price, and if you are over that fixed price, you lose money. If you're under that fixed price, you make money. I made money in all my fixed price contracts, so I've got a lot of experience in making sure that when I price a process plant of the nature of that we'd be pricing at Phalaborwa, that we will be on track to meet the capex budget for that project. And in terms of timelines, also got lots of experience, our team, in terms of doing fast track projects. We've built a number of large projects, in 18 months, in the middle of the jungle, where it'd be the DRC, Ghana, Tanzania, and we've been on budget and on time. And we'll be building literally in South Africa, which with rail sidings right into our project site, tarred road right to the project site, airport 5 minutes away. So to build a project in Phalaborwa, by comparison, will be a walk in the park. So I think we don't foresee why we won't be able to deliver this project on the timelines and on the budget once we finalize our budget in the bankable feasibility study process.
And one more on the pre-submitted questions on Phalaborwa. How confident are you in obtaining the outstanding permits?
Well, it's a brownfield site. It's already permitted. All we have to do is make amendments to those permits. There's one greenfields permits that we have to apply for, and that's for a new stack site, because what we have to do is, as we process one stack site, we'll redeposition onto a new clean stack site, and then once that stack site is depleted, we'll make that stack compliant with IFC and equator principles in terms of linings, and then we'll start processing the second stack, and that second stack site will then go onto the stack site that we've cleared and we've done. So it's a greenfields permit, but because this is a big environmental cleanup, one thing that I haven't mentioned is this has got huge environmental credits for any project because you see if I go back to this photograph here, that green you see on the top of those sites is actually acid water. we're going to be, and that's a risk to the environment. That's why there's an environmental management plan in sight over these stacks, with an environmental management fund funded by Sasol to make sure that that this can be cleaned up. We, in fact, are going to be doing this on behalf of Sasol. We'll be, and Bosveld, who we engage with to do our JV on this project, we've got 70% of it, is that we're going to be neutralizing all the stack water and using it in a closed circuit in our process plant. So the gypsum that's redeposited will be clean, benign. It'll be dry stacking, so there'll be no acid water associated with it, and that immediately means that the environmental risk associated with the new stacks is totally negated. And it also means over the life of the project, we will reduce the environmental liability associated with the site to zero. So it's got huge credits from that point of view. And it's a very, very huge environmental cleanup project, which, once again, as I said, at some stage we'll start getting credit for that as well.
Thank you, George. And to move on to a few questions on the market, what is your view on the demand and supply dynamics of the rare earth sector?
Well, as I say, I'm very, very bullish on the rare earth sector, mainly because we all know that demand for permanent magnets, which are critical for, as I say, for electric cars, for their motors, that create range for those electric cars, which means your battery can last longer, and everyone's chasing range, we know, in EV batteries. And for your wind turbines, the reason why wind turbines need permanent magnets is because the new generation wind turbines are what's known as direct drive wind turbines. That means they have no gearboxes. That means they have minimal maintenance. And if a lot of these wind turbines are being situated 100, 200 kilometers out in the sea, and you can imagine the cost of trying to change a gearbox 100 or 200 kilometers offshore. It's just, the cost is phenomenal. So all the wind offshore turbines are direct drive wind turbines. They need those permanent magnets so they can get more power out of their motor for a smaller motor because of the power that you get from the permanent magnets. So this has been driven by legislation, government legislation. EV manufacturers, you say by 2035 or 2030 or 2040, we're not going to be making internal combustion engine motors. Governments are saying you won't be able to buy these internal combustion engine motors with these various timetables given to the world over the last 18 months. I believe those timetables will be moved out, but what we are sure about is that they are going to be in place. And whether you think that there'll be no electric vehicles sold in 2030 or 2035 or even 2040, it doesn't matter. Eventually, there'll be no electric vehicles sold in France, in Europe, in the UK, and in places like Scandinavia, Australia, and so forth. So I think the demand is there. We know there's not enough supply. We need new projects to come on stream, and there are a number of projects that are being developed. Only a few of those will be successful. So the demand curve is very strong, and I don't believe that's going away. And my belief, as I say, is also, from spending 16 years in financial markets and trading in gold shares and dealing in gold assets and so forth. If I asked you for a forecast on the gold price, 20 analysts will tell you it's going to go to 3,000, and 20 analysts will tell you it's going to go to $1,200 an ounce. There's not one forecaster, one analyst is not in agreement that rare earth prices are going up. So I think we're very lucky that the macro market for the forecast pricing is very, very strong. It's legislated, it's not going away. So we're very lucky from that point of view, in my opinion.
Thank you. And with that in mind, how do you see Western governments and OEMs engaging in the rare earth sector in the coming years?
As I say, they are talking about engaging. They've started an engagement. We've had a number of conversations with members in the UK government responsible for this area, as well as the US government. And there's definitely an initiative to try and create a strategic supply outside of China. We believe Rainbow will be part of that solution. As I said, we are going to be one of the few projects that's going all the way through to separated rare earth oxides, and of course that means that we can start talking to metal and metal manufacturers and guys who take that metal into alloy. because they then have to feed the magnet manufacturers. And the magnet manufacturers in the Western world are expanding. There are a number of expansion plans. Some of them have been announced. Some of them are going to be announced. So we see a strong sort of there's strong dialogue with these various governments, and I think they will be hopefully part of the financing solution, as I say, for the project when we are ready to talk about that financing in 2024.
And are there replacements for your for the products today? And if not, what are the risks of those being developed on a 10 to 15 year timeline?
To be honest with you, it's going to take 10, 15 plus years to find a replacement for permanent magnets. Permanent magnets, these things were first looked, the world came across them, or the scientists came across them in the 80s, 1980s, 1990s. We're now 30 years on, and they are the best thing for this application available to the world. So also in the cost of an electric vehicle, a permanent magnet is less than 1% of the cost of the electric vehicle. So even if the price of a permanent magnet to the electric vehicle manufacturers doubles, it's only 2% of the cost. So we don't believe that there's much substitution taking place in the foreseeable future. If it becomes a significant price, then yes, maybe. As I said, in wind turbines, I also see less risk because of the fact that these wind turbines are being situated so far out at sea. They need direct drive motors, and direct drive motors, the only sort of thing that creates that power for them are permanent magnets. So I don't see much substitution. I'm not saying it's impossible, but that substitution will take 15, 20 odd years to develop. We'll have depleted Palabora by the time there's a substitution for a permanent magnet. And also, I went to a rare earth conference in Las Vegas in November last year, so it's very recent. We had a very comprehensive presentation by Arnold Magnets, and one of the few permanent magnet manufacturers in the US. And they explained to us the difficulty in developing permanent magnets for applications in terms of how much research and development goes into that and how many years it takes. And once they design and agree on the compound for the permanent magnet that will drive, F-1 fighter jets and Boeing applications and Boeing airliners and so forth, they are then not going to change for many, many, many years. As I say, and so the threat of substitution right now, I believe is very low. One can never say impossible, but I believe it's very low.
Thank you. And moving on to a couple of questions on Rainbow and the company. Rare earths are, in fact, not that rare. So how does Rainbow differentiate itself from other developers? And how does the potential TREO compare with other companies and their assets?
It's a good question. You're right. Rares are not particularly rare, but where they are rare is to be found in economic, exploitable projects. So if you look at in 2008, 9, there was an explosion. 2010, there was an explosion in rare earth pricing due to a spat between China and Japan, and that's what led to Japanese funding Lynas to create an independent source of separated rare earth oxides outside of China for their permanent magnet manufacturing capabilities in Japan, and something like over 1,000 rare earth projects were then suddenly came onto the market in terms of IPOs and one or two private projects were touted about in between 2010 and 2012. Out of those 1,000 projects, there's only one that's in production, and that's Lynas. Now, so what I'm saying is that this is slightly different, this rare earth, because that was what's been driving the price rise in rare earths is the as I said, the government legislation and the COP26 targets. So the demand and the strong pricing for rare earths is not going to go away. So what killed all of those projects was the rare earth prices collapsed, and those projects were not economically viable. So what I'm saying is that project economics for rare earth projects to be successful are very, very key. If you look at our project economics, very strong. We could sustain the halving of the price of current rare earth pricing, and we'd still be profitable, which is one of the reasons which makes Rainbow, I believe, unique. Secondly, you look at our grade. You can't compare us to a hard rock project because we are gypsum residue stacks above the ground. You compare us to an ionic clay project, which is what the Chinese mine, and a few other ionic clay projects around the world. When you compare us to ionic clay projects, we're between 6 and 10 times the grade of ionic clays, because ionic clays are very low cost of mining. We have a very low cost of mining at Phalaborwa because we just are going to hydraulically mine the gypsum into the process plant, which is very low cost. It's less than $1 a ton. Mining cost, a hard rock project, in terms of mining costs, anywhere from between 15, 18 to 35 plus $40 a ton to get to where we are at Phalaborwa. So we've got a very low cost of mining, and if you compare us to ionic clay deposits, as I've mentioned, we're 10 times higher grade. So very important. We've got, and all mining projects, grade is king. We all know that. And then thirdly, if you look at our rare earth basket, 30% of our, or 29.1% of our rare earth basket is made up of two key rare earth elements, neodymium and praseodymium, two of the key permanent magnet rare earths, and that's one of the highest percentages of any rare earth basket in the world. So you put all those factors into account, I believe we have a unique position in Rainbow, and that unique position in Rainbow I've identified with other phosphogypsum opportunities in the world. We've signed an agreement with OCP in Morocco, and we've got NDAs with two other similar Phalaborwa lookalike projects. NDAs have been signed with the different continents around the world. It's not Africa, it's somewhere else. So yeah, I think we're in a strong position.
Thank you for that. Sorry, just reading the questions. How can Rainbow remain unique with the processing approach, and how easily can the flow sheet be replicated by upcoming companies? What are your thoughts on that particular aspect?
Well, that would mean that they would have to have access to other phosphogypsum opportunities in the world, and I can tell you there aren't many opportunities out there. The three biggest opportunities in the world I've already identified, and we've got an agreement with one, and India signed with two of them. So I think that might give some color onto that question. But also importantly, the IP that Rainbow has developed, the back end of that IP is already patented by KTech. It's continuous ion exchange and continuous ion chromatography. KTech, the guys at KTech who've developed this are still there. They've got over 40 years of experience in phosphogypsum, and they in fact were the inventors of continuous ion exchange, which you use in the uranium plants around the world, and they also were the inventors of continuous ion chromatography. So we've got very strong IP at the back end, and the front end, using Rainbow's very strong technical team and the KTech team, we've now developed a front end which we're busy patenting. And that patent is in the process of being finalized and lodged, and we believe that gives us a very strong position in the market. Of course, over time, somebody could replicate it, but it'll take them years and years and years to get there. And so, like anything, you're the first mover. You've always got a big advantage. Nokia didn't make the first mobile phones in the world, but there are lots of mobile phone manufacturers in the world now. But they were the first mover in the mass market, and for many years they dominated the mass market. And then they made mistakes we all know about. So what I'm saying is, having first mover advantage in this area of IP and to look at this opportunity gives us, I think, a unique position in the marketplace.
And last question, what are the major corporate objectives for Rainbow to achieve in 2023?
I think I've gone through that, to be honest with you. There we go. We've got a resource update. Our pilot plant will be built and up and running by the end of the next quarter. We are already started the EIA permitting process. That's already started in conjunction with the start of our bankable feasibility study, and that will be delivering by the end of this year. So I think those are our key targets for 2023, which will be very significant.
George, Tara, perhaps if I just jump back in there, and thank you very much indeed for being so generous of your time there and addressing all of those questions that came in from investors this morning. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended for you to review, to then add any additional responses, of course, where it's appropriate to do so, and we'll publish those out on the Investor Meet Company platform. George, perhaps before redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments, that would be great.
Yeah, so I think just for the audience, this will be on our website, this presentation. There are a whole bunch of appendices with a lot more information on the board, which is a very experienced board as well. Apart from the technical management team, we've got a very strong and experienced board, and you can, at your leisure, go through those appendices. But just to finish off, as I said, people invest in companies to make money, and I believe the reason why one should be looking at Rainbow is that there's a massive value gap between our market cap and our NPV, and the fact that we've got such strong metrics in terms of financial metrics of any project of this nature. As I said, Rainbow is, we believe, going to be the lowest cost producer in the world of separated rare earth oxides, even below the Chinese. That came out of my conference in Las Vegas last year. And as I said, we've got exceptionally strong metrics, and I believe that we've got the team to close that value gap. So I want to leave the audience with those thoughts.
George, that's great. And thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This won't take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Rainbow Rare Earths Limited, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.
Thank you to the audience.